What is going on, YouTube? Good morning, good evening, wherever you are. Welcome into another pre-market live stream here with the Everyday Growth Advisors. Hope you are doing okay. Another interesting set of developments. So yesterday we had a earnings by Microsoft that came out a little over expectations in terms of revenues and EPS, and then the guidance came. And this is the thematic approach that we have been looking for all quarter. Prior heading into this specific quarter, we've been looking for earnings compressions and guidance to squash, and everything was fine until the earnings call came up, and then, you know, obviously the guidance was not as good, caused a big whipsaw on Microsoft to the downside, and that's all she wrote. This is causing further jitters in the market across pre-market here, and it's obviously causing a lot of mayhem in tech specifically. But we are seeing those levels, and once again, you know, just to refresh you guys on what we have on the newsletter for this week, you know, we cautioned playing against the upside, you know, last week, and I mentioned a failure for bulls to recapture the 4,060 will set this downward trend in motion, but will not be bullish until 4,000 or 4,060 are taken out subsequently with major catalysts, right? So the bullish plan did not go through. We pretty much failed at around 4036, 4037, right? And as I was mentioning, the risk to reward ratio structure still favors the downside here. So play the moves to the upside cautiously and take profits early and often. That was, you know, what we had mentioned very, very carefully and specifically on the newsletter. And, you know, it's just obviously it's quite a important thing to understand that when risk reward ratios are not in your favor. Obviously, we had that big rally to the upside on early in the week, but remember that you have to stay true to your thesis, what you are following, drown out the noise from the rest of the market, and trust your own judgment. And so our bearish thesis was that the upside rejection and the downside move happened pretty aggressively and quickly last week, so we want to see continued rejections occur at around 4,000 or above, and move below 3950 will secure the bearish momentum of the market. I now see that, in fact, 3950 is not the pivot anymore, but rather 3930 or 3920 would be the pivot, and I'm going to show you that in a second here. So below 3,900 sees ultimately the retest of the strong 3,800 level, which we've been talking about. And obviously, this is not just going to happen right away. We ultimately want to see SPX come down and retest this level in the 1 to 2 weeks before FOMC, which is going to be coming up sometime next week. So playing the downside, as long as we reject 4,000 or higher and breaking down below 3,950 is the smarter move for the risk to reward ratio structure. So I already posted that on the newsletter plus our Discord, and we've been lining up some various plays along with that. We took some end phase energy shorts because this has been a pretty bearish setup here so far, and we played into that. So that has been pretty nice. I avoided taking. I took Tesla short yesterday, but it didn't play out exactly as I planned. I ended up coming up net positive 100 after I managed to secure back a trade later. Apart from that, it's been a pretty lackluster week for me in terms of risk taking. Just currently up about $13,000 for the week. Not really that much in terms of absolute, returns so far. I haven't really been putting on much risk, mainly because I haven't been really confident with, where things are heading in the short term. So let's talk about, obviously nothing on the macro to update you guys, but let's talk about the technicals here. 3,950 was the level at which I was thinking would be the pivot, but now I'm starting to think that this might need to move further down a little bit, and 3,920 or 39, even 15 or 3,900, let's just call it, would be a better pivot. Somewhere in this region, we have to be really careful for another bounce, basically, right? So if I were to call it, I would say anywhere between 39, 40 or 3,950, all the way down into this zone right here at 3,900 is going to be a potential bounce zone. So this area right here is going to be a potential bounce zone right here. Let me just make that a little less translucent. There we go. So I'm going to potentially be looking very closely once we start heading into this zone, because earnings are still coming out, and even though the market's going to start pricing in bad guidance, we definitely want to be cautious about what the market's pricing in. That's something that we have to always keep at the back of our head. Okay, so as we get further down here, and then the optimism fades away, and then fear starts to set in, we want to be cautious here, because then that would cause that higher low scenario, which would cause a bounce even higher. And so if we don't get a bounce here and we fall right through these levels, then okay, that sets up the bearish momentum down into 3,800. But here is where I want to be extremely careful trading for a potential bounce, because it has been support in the past multiple times below this 3,950 level and 3,940 and 3,900. So this entire box here is going to be a very cautious spot for me personally. Now, if obviously if we start breaking below 3,950 and then start rejecting 3,950, so let's say we get a move down and then a wave up and it rejects 3,950, I'll be comfortable to take a short position down. But that's for another day. I don't think that happens today, and I think by Friday we probably get that outcome sorted out. So that's updates on SPX in terms of technicals. Make sure, guys, if you have a chart that you want me to go through, post it in the comments right now so that I know how many of them I need to get lined up here right before the stream ends. I appreciate you guys once again taking the time to be here. Make sure you hit that subscribe button and the like button if this is your first time here. If this is your returning time, put a blurb in the comments and let us know what you like about this live stream so far and how you want to see it improve. I would really love to hear from you guys. Heading into NASDAQ, this is a little bit of a different setup here, and obviously has still potential to bounce to the upside. The interim levels that we need to be immediately worried, or rather cautious about, is going to be mainly looking at these specific bounce levels, and that's going to be around 11,500-ish. Okay. So here, this level 11,500 in NASDAQ has been a strong support in the past, and then it became a strong resistance, but then we broke out of it last couple of days, and so we need to see how we're going to interact with this level here. It also happens to be on a potential trend line to the upside. So if we don't get a strong breakthrough here and then start rejecting this level, that's going to set us up for a bounce to the upside. If we do get that strong breakdown and then a rejection level at 11,005, that's going to send us to the downside, back to retest 11,200 on NASDAQ. And then after that, obviously 11,000, and then so on and so forth, back to 10,600. Okay, So there's many ways this can go. You're going to have to play it pivot to pivot. There is no absolute way to guess exactly what's going to happen in this market. As usual, you have to always just take it as you come. Now, IWM was a great setup yesterday. We took short positions on it as a team on Discord. Of course, yesterday was a pretty choppy day, so it's been interesting to see how price action has been playing out. But obviously, heading into here, this has been rejected many times before. We were looking for that same potential rejection, and then the continued break below 186, which kind of sealed the deal this morning. And hopefully this pullback on small mid caps, which have been pretty overrun, and I've been speaking about it for a while. As I mentioned to you guys early on in the right after the new year, I mentioned to you guys that small mid caps were the ones that I really wanted to play as they were about to break out. They went into a crazy run, right? And now they're starting to see, okay, you know what, we're kind of overheating a little bit, and the market's kind of putting in a double top here for a potential retest of this 180 level in the future, okay? So we'll be watching IWM pretty closely here to see if we can continue to slide down. Next target is going to be around 183.70, and then obviously 180 below that, but we need to break 182 with the strong momentum. If not, then we'll probably bounce somewhere in this region. So you have to be extremely cautious. I'd say take profits early and often, as usual. Gold continues its kind of ascent here, but obviously it has slowed down a little bit. The dollar is also taking a breath, or it has been trying to take a breath for the past couple of sessions. So we'll be watching, obviously, bonds closely here as well. Bonds have been buying up pretty nicely across the past 2 sessions or so. As I mentioned, first quarter of 2023 is likely to see the uncoupling of bonds from the equity market, and likely to see the inverse correlation start to kick in, or back to where it was prior, as the equity market starts to realize, or rather investors start to realize, they can get a better return on yields for treasury bonds rather than the EPS earnings yield on the S&P 500, which is a thematic theme that we want to take advantage of. Semiconductors obviously broke out of this resistance, and I was already very skeptical of this because it was pretty overbought. I haven't been trading semis at all, and when I see this kind of a situation where it's super overbought super quickly, I don't like to really take the upside here or take additional risk to the upside here, even though I know that there is possible upside. So one of the reasons is obviously because of the risk to reward ratio. It doesn't make sense for me to take an upside trade here. It doesn't give me that good risk to reward scenario where I can say, okay, my money's worth putting down into this scenario where I'm getting this upside. There is, after all, a huge resistance at this level up here at around this 240 something level, right? 247 or 248, right? And so I haven't touched semis. And it looks like NVIDIA is going to be a really nice one if we can get below 187 today to play some downside on it. So I'll be watching that one pretty closely today. NVIDIA 187, below 187 for the short. If it bounces and still continues its momentum above 188, I probably will not touch this until it starts to reject and move down. We need a wave down here in order for this to sustain. So yeah, I will not trade semis until we get that wave down. I know many of you are going to ask about Tesla, so I'm just going to do it anyway. On the 1 hour, this still looks like a pretty strong uptrend, but it needs to come back to do a test of the dual zone here, more than likely around 136 or 133. That would be key levels for Tesla to come back down to retest before another bounce. And so this is what I'm looking at is across the board. If we get these little pullbacks, minor pullbacks on NASDAQ, we get these minor pullbacks on SPY, but then still remaining in an uptrend, then that's going to cause pretty much a little bit of bounce play. So that's also a possibility that I see, because remember that one earnings doesn't make the market, and Microsoft's earning guidance is not going to mean that everything else is going to fail. So we'll have to see how that goes in the next day or two. Another thing that I've been looking at, Mara saw some very unusual options flow yesterday, taking some March $15 calls. I'm not sure what that was about, but there was repeat flow, and we'll continue to see if they're continuing to take upside exposure on this, because eventually if more flow comes in, it's going to cause some kind of a squeeze, a gamma squeeze or a short squeeze in the future. So I'll be watching that one closely. and seeing if we can play any part of it. Okie dokie, let's have a look. MS downgraded Lucid to $5 from 10. Oh, okay. So I'm guessing that Lucid is down then? Is it down bad? Oh, I mean, yeah, the stock is kind of on the floor already, so. Lucid is one of those businesses that you just want to buy shares and just hang on to them for a long period of time. Don't even look at it. Like, if you think that it is going to be a competitor to Tesla, then that's the right strategy to play with Lucid. Don't pay attention to the short run price action. Just pay attention to, the fact that, it could be a Tesla competitor, and then go with that. This chart is absolutely disgusting, obviously. So lots of manipulation in the price action here. Medtronic, I'm long shares, selling calls, underwater, 90 cost basis. Let's see. Okay. I wouldn't sell calls here, that's for sure. You're gonna have to wait for this thing to reverse out and rally. So selling calls here is gonna it's not gonna give you the premium that you want. First of all, you would be better off, honestly, selling some. If you don't mind additional shares, then you could do a cash secure put possibly. But I don't think that's gonna give you much premium too. That's one of the problems with selling options contracts on low IV stocks like this. It's medical specialty, so I don't think the IV is going to be super high. 107 billion market cap. Okay. I mean, it's not crazy bad. It's just, you want to wait for this thing to start reversing, then sell calls on it. So I don't think it's the right time to sell calls on it personally, and neither is the right time to sell a cash secure put neither. So you're kind of just stuck with this one for a little while. I will say that this is entering a possible demand zone here. But it could go a bit lower. I mean, it could go obviously as low as 55, but then at the same time, I think that the more recent price actions would probably suggest that there is a pretty strong demand zone in this area right here. I would say around 76 or 75, right? That area has a stronger demand zone around, this area right here. So I would probably wait before you do anything with that. Don't touch the options contracts on these just yet. Okay, any other ticker breakdowns you guys want me to do? Bitcoin's been rallying quite a fair bit the past couple of sessions, and now it looks like it's cooling down just a little bit. It is bull flagging on the daily, which is pretty nice. The same happened with Ethereum, I believe. Yeah, it's kind of bull flagging. Yeah, that's all I kind of have. Lemonade or LNMD. I think you meant LMND. LMND, right? Lemonade, this one. Oh, INMD. In mode. Okay, gotcha. Ooh, for some reason I have this charted out, so someone must have asked me to look at it. Looks like in a pretty long accumulation phase so far. Well, it looks like it wants to go up into a markup phase soon, though. Interesting. This is a nice find. This could be interesting if it starts to break above, these upper levels here. I think above 38.62 or even $40 maybe. This level here is where you would want to play this upside. Let's see. So, obviously now you don't touch it, but you can set an alert right here around 38.32. That would be your first one, and below 31.66 would be that upside downside scenario. Above 40.32 though, this level here is probably a more risk on situation. That's what I would be looking at. You have this level right here. You'd have this level right here, and then you'd have this level right here. These would be the pivots for me personally. Look at the volume as well. Oh yeah, this level is going to be a key level here. This is key. breaks below, you probably see all the way back to 26, and then above this level here, 38, sees all this upside. So there's possibility of any scenario for here. I think you just you have to wait out the price action on this one. It looks interesting, but definitely not actionable just yet. That's my 2 cents. Okay, CVX. Yeah, this one is coming out of a. It was, wait, let's see. Did it pull back 50%? Let me see. No, let me see. 1 second. Let me redo this really quickly. So this wave right here, let's have a look. Almost 50%. I would say this kind of negates the bull flag theory. So this is no longer a bull flag. It looks like more like it got marked up and then it kind of distributed a little bit right away, and then it's trying its luck at breaking upside. What does bother me here is this right here. Is there's a lot of top wicks on these candles on the 4 hour right here. In terms of price action, I think that there's a little bit more downside before any upside here. That's what I'm thinking with CVX. Yeah, I think you have to be cautious. Let's have a look at the volume here too. Yeah, so yes, so definitely it might come down a little bit before it rallies. That's for sure. It has all of this liquidity that it has to sap up before it kind of makes that move to the upside. It has a pretty big resistance here. Now, obviously, all of this will be negated if it breaks out very strongly above this level here, 182.50, right? So I think here's your upside downside scenario. Above 182.50 is your upside scenario. You can play the upside, but then remember that upside's limited all the way up to around 186 and then 190 roughly. So I'll set an alert at 182.15 somewhere here, and then another alert at maybe 182.69 for that confirmation breakout. And then your downside scenario, you want to go below like 177. Let's just say 177 even here. That would be a downside scenario. So maybe you want to set one more right above it just to tell you that it's approaching. So 178, 177, two alerts here. One to tell you to get ready, one to tell you to enter. That's the way I would look at this one. Downside scenario has to be followed with good momentum. Upside scenario has to be followed with good momentum. That's my 2 cents with CVX, Eddie. So, yeah. I hope that was helpful. For anyone else, I guess y'all can bring your charts on Friday. Once again, guys, thank you so much for attending the live stream. I'll see you guys back on Friday. Have a good one. Not really much to report these days. Sometimes market just gets a little stale and cold, but we stay disciplined and we stay just after it. And I'll keep reporting back to you guys what I see. If there is anything, there's a whole bunch of things that I haven't digested yet in terms of reports. So I'll be doing that maybe during the market hours today if the market doesn't get super bearish or anything like that, and it starts chopping around, which is a very, very, very possible thing to happen. So I'll see you guys back on Friday, and till then, peace out, take care, control your risk, please don't put too much on, and we'll see you. Bye bye.